CPR stands for Central Pivot Range. This indicator was introduced by pivot boss, named Frank Ochoa. The traditional pivot points generally have one pivot line surrounded by support and resistance level. Above the pivot line, you will be getting R1, R2 and so on. And below the pivot line, you will be getting S1, S2 and so on. This is called standard floor pivot points, which we all know. In standard pivot point, the price is above pivot point, it's expected to be bullish for the particular day, and the price is below pivot point, it's expected to be bearish for the particular day. This normal pivot point single line is broken into 3 lines, that is called expanded floor pivot points. This central line is called central pivot points, top line is called top central pivot point, the bottom line is called bottom central pivot points. These 3 lines are together called as central pivot range. And above this, default resistance will be there, and below this, default support will be there. Why these 3 lines are important? The importance of this particular indicator is, if these 3 lines are very near to each other, then it's called as narrow CPR. That trading day will expect it to be very volatile or trending, either on the upside or downside. For example, on the 3rd of June Bank Nifty had narrow CPR, so the market was trending day. If these 3 lines are far away from each other, then it's called wide CPR. That trading day will expect it to be sideways or less trending day. For example, on the 16th of May, Bank Nifty had wide CPR, so the market was sideways. This CPR indicator can be used in TradingView, in.tradingview.com.